Hey everybody, and welcome to Breaking Biotech. Thank you guys so much for being here with me today. Excited to talk about the latest in the sector and a lot of good news coming out. So we had the departure of Scot Gottlieb, the FDA commissioner. So going to talk a little bit about that. Going to talk about Amarin. I mentioned at the beginning of the week that I sold some shares and then bought back in and decided that I should really put together a model and forecast what we can really expect from the stock. So I'm going to talk about that and going to follow up with the Sarepta update that we heard 2 weeks ago. So what I first want to do is just talk about the macro environment. So I didn't do a video last week, but the data was okay actually for some of the housing stuff that we got. And this week we actually saw decent housing as well. So housing had been on kind of a slump, and then I think with the interest rates going up, it kind of released a little air out of the bubble, and things are looking okay now. But we did see a pretty bad number for non-farm payrolls on yesterday, but unemployment was okay. So it seems like we're going to continue to get sort of mixed data until we see a trend go on. And once the trend changes and it firmly changes, then it might be something to look at. But the market yesterday opened quite low, and then it bounced back quite a bit. So if we look at the XBI here, I had a trend line going over here. It kept bouncing off of it, and then we broke through it earlier in the week, and it might be used as resistance so that we can continue to consolidate and decide on a move. But there's a lot of hype over the trade deal that still might come and it might not come, so we'll see. But this week, the macro environment, we're getting some retail sales data on Monday, CPI Tuesday, and new home sales for January coming on Thursday. So kind of a light week, I guess. But other stuff that went on this week or I guess it was 2 weeks ago now, but Spark did officially get bought by Roche at $114 a share. And we're starting to hear now that there were many buyers interested in Spark. So that's kind of interesting, because you would think that maybe these buyers might be looking elsewhere now since Spark has already been bought. So gene therapy companies were all up on the news. And then sadly, once Scot Gottlieb announced that he was going to leave the FDA, a lot of the stocks dropped on that news and gave back some of their gains. And that's because Scott's been very optimistic on gene therapy and has given a lot of guidance to the companies. So the sector, I do think, is going to be relatively volatile until a new FDA commissioner is selected. So other stuff, Amarin's been kind of up and down on hype of a buyout. We don't really know yet if anything is materializing with that, but it does continue. And it also seemed this week that the BMY Celgene merger might be in jeopardy. And that's because the top shareholder of Bristol Myers announced that they weren't happy with the deal and they didn't like it. So BMY increased its share price in the news, and Celgene dropped. And I wish I had have acted quicker. I would have liked to pick up Celgene, because I do think that the merger is going to go through, and that this is just, it's just drama that's going to eventually sort itself out. So I do think that the deal is going to go through eventually, because the top shareholder still doesn't have enough of a stake to really cause an impact, unless they could really try to get it going. But I think the voting date is in the next month or two, so don't quote me on that, and definitely double check. But yeah. So other news, and I did mention Scot Gottlieb is gone. I think he said next month, and the reason why he stated was that he wants to spend more time with his family, and I don't really see why we shouldn't take him at his word. Trump and him have gotten along, and he's been generally positive in terms of offering a lot of guidance to companies, as well as approving drugs. He hasn't been a force that has stopped development in the biotech sector, so that's good. And he's been friendly to gene therapy. So depending on who gets nominated for this position, we could see some volatility before then. And also, consider the politics of today and how divided both sides are. So even if Trump picks somebody who's relatively moderate, they're probably going to struggle to get approved by whoever the body is that approves the FDA commissioner. So it could take a while, but yeah, hopefully it's somebody who's also supportive of drug development, and it'll help the sector. But until we get a name, I think it's going to be we're going to see some volatility around here. So besides Scot leaving, we heard that the Gilead VP of Oncology is leaving, and it coincided with the start of the new Gilead CEO. So, we could start to see some interesting things come out of Gilead, maybe some M&A going on. It's hard to predict, but with a new CEO, I think people who don't share his vision for the company might not want to stick around. So we're seeing this kind of shuffling of the C-suites, or VP, whatever, the executives, and it could be interesting. So we'll see if they do decide to buy a company, and a lot of people are hopeful that it's a NASH company, and it could be, but we'll see. It also it looked like the COO of DBVT is leaving. So this company, has struggled to get an allergy product approved by the FDA. So I think just there's some frustrations going on in that company. And again, it seems like the company, when people are leaving and things like that, it could really just be like burn the whole thing down and then rebuild. And if they do get people who are willing to take the reins and push forward, that there could be a lot of hidden value there. So again, I'm not taking a position, and I did add to my Amarin position this week. But it's interesting to see the changes in executives for different companies, and seeing from this point like how things are going to change for them moving forward. So anyway, let's talk about Amarin. So I'm hesitant to talk about Amarin or show any models or anything like that, because it's a very, let's say, retail driven stock. There's a lot of cultish following for Amarin, much like Sangamo. And no matter what my opinion is, people are going to hate it. So nothing that you hear here is to be taken as investment advice. And if you have constructive criticism, I'm happy to hear it. But it's this is just opinion, so take it as such. So what I wanted to do is look at Amarin and compare it to different cardiovascular drugs, especially ones that are involved in preventing cardiovascular events. So cholesterol lowering drugs like statins or ezetimibe are what I looked at, and combinations thereof. So I think it was like 8 drugs that I looked at over the past 30 years, and some of them more successful than others. And it's contextual based on how many drugs are there before and who's got the most hype and which papers have come out. So it's kind of interesting to see how you can get the Lipitor, which has a combined total revenue of like 144 billion, and then compare that to like the Novartis drug Lezcol that didn't do very well at all. So there's a huge variability in the amount of revenue these drugs bring in. So what I tried to do is smooth out the data to figure out kind of a best case scenario for Amarin and a worst case scenario and like an average. So right now, the number of people that have over 150 milligram per deciliter triglycerides in the US is 50 to 70 million people. So that's kind of like the upper limit of prescriptions that we can expect for vascepa. And then based on that, I kind of did a sequential increase in revenue year over year and went from there. So the average increase in sales after year one was from 28% to 604%. With the average is 251% with a standard deviation of 191. So it's not super useful when the standard deviation is so crazy. If I tried to omit some outliers, because these companies weren't, they often had like partnerships that switched revenue from the old company to the new company, and other companies had they didn't just announce the revenue from the single drug. They did like cardiovascular sector of drugs in their reporting. So that made it a little bit tough to get just clear-cut numbers often. So when I omitted 3 of them, Pravachol, Zetia, and Vytorin from the previous reportings. They were reported as a sharing drug and then as a Merck drug. So I omitted one of those, and I still got this crazy variability with like an average of 354% increase in the first year with this huge range. So what I ended up doing is this second point here, which is I averaged out year 1 and year 2 increases of revenue, and I used standard error of the mean instead of standard deviation because it smooths it out a bit more. And this is all based on just assumptions and my own personal opinion. So Vascepa's first year on the market will be 2020. So I took that into consideration as year 1 and made my middle case scenario as year 1 and year 2 increases of revenue of 144%, and then the aggressive or the generous outlook is 200%, just as like 144 plus 43 with a little extra room, and that actually did get the prescription number close to 50 million. So I think that it's a decent surrogate for the generous outlook for Amarin. And then the disappointing revenue is around 100% increase in revenue from year 1 and year 2, and we'll look at that. So the other thing I took into consideration is loss of exclusivity. So the average loss of exclusivity decreases in revenue from these companies was 42% in the first year. The second year was a loss of like 46%. So it's pretty dramatic how quickly the revenue goes away once these drugs get off patent. So, and we know that Amarin has a deal with Teva that in 2029 they'll be able to produce a generic version of Vascepa. So I took that into consideration as well. And to further kind of make me feel better about my model, I looked at the peak revenue. So the peak yearly revenue for ezetimibe, which is Zetia, was 2.6 billion, and the Lipitor peak revenue was 12.8 billion, which brings out an average of like 5.47 billion if you average all the drugs that I looked at. So I wanted to make sure that my revenue projections were in the ballpark of this, without being too generous or too negative. And I think before I show it, it's my revenue is a little bit pessimistic, I think, just given that the nature of the drug is pretty substantial. I do think that the triglyceride lowering effect and the data that they have and the excitement around it is going to drive a lot of revenue. But, there is a maximum number of people that can take this drug. And based on the ability of Amarin to get their sales force out there, I think there is a lot of uncertainty on how many prescriptions are actually going to get written. And I've been seeing on Twitter a lot of excitement around the prescriptions, but, there is a number out there that they're going to get. And we have to keep in mind that they have to be able to deliver on this. So here's what I have. So the disappointing revenue increase of 100% for year 1 and year 2, and only reaching a peak prescription of 21 million and peak revenue of 2.7 billion, $8 a share. And I don't think this is going to happen at all. But I'm just being honest with you. This is my negative outlook, is this. Now, using like the average revenue increase that I showed, yields a price of 26.2 with a net present value of 7.8 billion. And that's with a peak revenue of 4 billion and prescriptions of 31 million, sorry. And then with the generous rate, I get a price of 54.6. So there's a lot of other things that you have to keep in mind when you're coming up with a model. So, and I used the numbers that they're forecasting for 2019. And for me, that's year 0. So year 1 is 2020 when they get that full approval and when they start to see those big increases in prescriptions. So they told us that they're expecting 350 million in revenue this year with an increase in operating expenses of 50 million. And then I came up with, based on the averages of other cardiovascular drugs, this scenario. So I can put this online, or I can send this to people if you're interested in looking at it more. But basically, you have to put in a lot of assumptions into these models and kind of navigate how the market is feeling about it. So I'm going to keep an eye out on prescription numbers and see whether or not they're able to hit this 350 million this year. But really, it's next year and the year after that that are going to be able to dictate the excitement around the drug and whether or not they're able to deliver on those scripts. And there's a lot of range in the success of other cardiovascular drugs. So some of them kind of had a slow start and then just held their own as like king. And others had this like explosion at the beginning of scripts and then they maintained that. So they didn't have too much growth going forward. But because so many people jumped on it, they were able to get revenue for years to come. So, and, also Teva might not be the only one who's going to come on the market and sell a generic. So whether or not 42% decrease in revenue at that time is realistic, it's kind of hard to know right now. So, but this is the model I'm going on. So I'm going to continue to buy probably whenever we get some dips around 20 or below 20 and add to my position. And, I do think that there's going to be volatility in the stock moving forward, given that it is such a retail-driven stock. But I do see, between 26 and 54 as more appropriate for them. And also, it's hard to know if they are going to get bought out. Amarin is kind of cash-strapped compared to like a big company like Pfizer, who was able to really get a sales force out there to sell Lipitor. So if they do get bought out, it's possible that Vascepa will be able to reach more people because they'll be able to dedicate so many more resources towards selling it. So, but that's kind of what I'm going on. And I'll talk about there's an event, American College of Cardiology event on the 18th of March where they're going to present more data. So that might move the stock. It might be a good chance to buy. All right. So the Sarepta data, they presented their Q4 results as well as their limb-girdle data at the end of February. And I was generally happy with the data. And I'll show you why. So they showed 3 different patients with their gene therapy. These are their CK levels at baseline. They're kids with this disease. And what they showed was an histological section that's stained with the beta sarcoglycan, which they're trying to express. So I'm not a huge fan of IHC in terms of, being confirmatory, because despite showing this intensity, there's so many different ways that you can manipulate this data to get a pretty image based on exposure or concentration of antibodies or things like that. So, it's nice to see this, but I wouldn't only want to see this and be satisfied with the data. And they show a nice normal control, but honestly, it would really be nice to know, like, were all of these sections on the same slide when they did the staining, and what concentrations of antibodies and what was the exposure set at, and things like that would really make me feel better about this data. But they are able to show this nice fluorescence image here. So they quantified it using mean intensity, which is fine. So they also did Western blot on these tissue sections, or on the tissue biopsies that they took. And it's nice to see this. It's a little more objective Western blot because you really just see this band and you can measure the intensity of that band. But I don't know why they didn't show the Western blot. I would have liked to see, that tangible evidence of a band being there that's stained with their beta sarcoglycan antibody, like they did here. And there's no good reason why. Maybe they said on the call. I didn't listen to the call, but I would have liked to see that here. But, those 2 pieces of data combined with this data makes me feel better about it all. So the CK levels dropped quite a bit, which shows there's functionality of the protein in these cells. So that's quite nice to see. And so overall, I'm pretty happy with the data. I think all patients had to go on steroids, which is not ideal. And sometimes that can interfere with with the therapy, the effectiveness of it. But it seems like they were able to get low CK values. So that's good news. So the stock rose on the news, and then Sarepta did another public offering. So they offered more stock, and that depressed it. And I think it's sitting around 130 right now. So I bought more, and I'm going to hold on to it for a while. I thought about selling at at the price after the data was released, but felt like it had more room to run. So, I'm going to hold on to it, and I do think the company has a bright future ahead of them, so I don't mind holding on to it. Okay, so things I'm going to look into this week. So this date that's not this week. It's in 2 Mondays from now. So look out for that and see if there's any interesting data that comes out. A couple ideas I have of things I'm going to look into. I'm curious about this company, CRISPR, and whether or not they're overvalued. They're trying to get their CRISPR gene-edited cells into patients for diseases that already are being looked into by a lot of other companies. So I think it's like beta thalassemia is the one where they've actually treated a patient, and the news of them treating that patient really sent the stock higher. And we know that Sangamo and Bluebird and Spark, they're all looking into patients with hematological disorders, and it seems like at a certain point, if the stock continues to rise, they might be overvalued, given that the CRISPR methodology is just a means. It's not the actual end result. You don't want CRISPR isn't the end. It's a means to get that end result, which is an improvement in their patient outcomes. So I'm going to keep an eye on that, and I kind of want to do a deeper dive into CRISPR itself. Another company, Allergan, I've mentioned them a few times, but this week they showed failure of a depression drug, which sent the stock decreasing. And then after we saw a shareholder letter from one of their top shareholders complaining about the mismanagement of the company, the stock increased. So we're expecting NASH results from Senocriviac, and I do want to look into Senocriviac and see whether or not it has a good or not chance of being approved. And I think given that Allergan has had such, I guess I want to say, negativity surrounding them, I wonder if there's an opportunity there to play. So I might look into that this week. And then finally, Trevena, I think that's the name. I did a video on them about their olocirridine drug, which is a painkiller, and they got a CRL from the FDA based on, I think the FDA was a little bit harsh on them, harsher than they should have been. And they actually said that the FDA received, or they got this type A meeting minutes, and the FDA said that they would take another look at the drug if they were able to provide more safety data. So, the company's valued, I think, at 100 million, 130 million right now. And it could be an opportunity to buy if you think that they'll be able to provide that safety data. And I don't think it's a huge trial that they would need. So I'm curious to see whether it's worth playing. So I might look into that this week as well. Okay, so the portfolio overall, we had a down week this week because the whole sector kind of dropped on Gottlieb's resignation. And the market itself the S&P 500, this is the first, actually, yeah, it is. It's the first red week this year. So XBI fell even more, I think, because of the Gottlieb news, but also the NASH drugs continue to get hammered. So I think my portfolio went down more because Viking, which I have a decent position in, went down a lot. And, I wish I had an answer to why that is, but I'm willing to weather the storm until they're able to, be taken seriously in the NASH market. Yeah, so other than that, holding strong. I did put more money into Amarin after I sold it almost 23, and I put more money into Sarepta as well as AMRN. So AMRN should have some data coming out. I think it's the end of this quarter, or at least the first half of this year. Yeah, so volatility-wise, there was a bit of a sell-off on Friday, so the expected move this week is a little bit higher. So with that, I'm going to wrap it up, but thank you guys so much for watching and listening, and we'll see you next time.